All right, thanks very much. Hope everybody's enjoying the event today. I certainly am. So I'm going to talk about how to trade zero DTE options on SPY for the next 30 or 40 minutes. My name is Russell Barbour. And before we get started, I just want to give a quick risk disclaimer. So obviously trading has risks. The risk of loss can be substantial. In particular, particularly important for today is I'm going to be showing some past performance charts. And it's important to realize that past performance doesn't always guarantee future results. So this is what we're going to cover today. I'm going to start off by showing you some results from a service that we run called Spy ATM Alerts. It's going to be 2 consecutive years of 100% account growth using zero DTE SPY options with just a single trade every day. We have a 78% win rate on that. We're going to talk a little bit more about that later on in the presentation. I'm going to talk about how timing, consistency, and position sizing do play a big role in zero DTE option strategies, and how a rules-based approach can help really reduce mistakes common in zero DTE trading. So like I just promised, I said I'd show you a couple of charts here. This is the first one. It's from 2024. It's the profit and loss on a small account, a $2,500 account, and it grew, about a $2,000 account actually. It grew 124% in 2024 following our Spy ATM alerts every day. So along the x-axis, you can see number of trades. It's about 230 trades for the year. And up to the y-axis is profits on that $2,000 account. So you can see it's $2,500 profit on that tiny account. Similarly, it wasn't a coincidence. In 2025, we did 102% on this service on Spy ATM. And again, its x-axis is number of trades. We did a few extra trades in 2025. And then up the y-axis, we have the account growth. So this one's a little different, starting at $2,000 and grew to $4,300. So very similar performance over 2 years. I just want to give you a quick introduction about who I am and my trading journey. In 2014, I was married, I had a lot of student loan debt, I was living in Seattle, Washington. I started trading to try and make some extra money. But like a lot of people, I lost money pretty quickly, about $20,000 of a $30,000 account in the market. I was trading penny stocks. I spent years chasing strategies, over trading and over positioning in the market. Things changed for me a few years ago when I met Phil. Phil's a developer, develops algos, and he's actually the mastermind behind the Spy ATM alert service that we'll be talking about later on here. And that really changed everything for me. It helped me realize consistency and mechanical rules and making sure position sizes were really, really right. And these things really added up for me to become a profitable trader with zero DTE SPY options. So like I said, I'm focusing exclusively on intraday zero DTE SPY options now, with just one single high quality trade every day. So I'm the co-founder of the trade alert service called Spy ATM. And again, we'll be talking about that in a few slides' time. But what is zero DTE? So zero DTE can be a challenge, but we've tried to make it simple. So we're going to talk about why zero DTE contracts are so popular, the benefits and risks to how to manage a zero DTE trade, key emotions. Emotions are very important in zero DTE because it's so volatile. Why you might want to trade zero DTE SPY in particular, and then we'll talk a bit more about the Spy ATM alerts and why they work so well for zero DTE trading. So what are zero DTE options for people that don't know? They started just after the COVID pandemic. New type of trading strategy really caught the attention of many traders. That was the zero DTE options that expire the same day. So zero DTE, obviously zero is 0 days, and DTE is days to expiration. So these are expiring the same day, and you're really looking at minute-to-minute performance on these. And I'm going to talk about why in a few slides here. But we can just kind of see on the scale here, you have 365-day plus, those are leaps. And on the very extreme end of the scale, where you just have a few hours to trade, are the zero DTE contracts. So why are they so popular? Well, there's several reasons. The first being that they're much cheaper than longer dated options. So people with smaller accounts can actually trade well with these and scale in and out, for example. They cost a lot less because there's no time value left on them. But they can be really cheap, as low as about $100 for a contract. And so they also react really fast to price changes. So this is really good for getting profits really quickly. They can rise or they can fall in price dramatically, often within minutes or an hour or so. Especially near the market close, it's when things get quite risky. And on Spy, there's daily trading opportunities, so that's pretty good. And they actually just introduced a bunch of other tickers with almost daily zero DT strategies now as well. So it's starting to become more and more widespread. The nice thing is there's no overnight risk, so you don't have to worry about some sort of news coming out of Iran or anything like that. You'll be out of the trades before the next day. So there are a lot of risks. So a lot of people that trade these know that they're very risky. And the first one is time decay, the theta that eats away at the premiums very quickly throughout the day. They are very sensitive, so gamma is very high. And this is good and bad, right? They can basically make a lot of profits quickly, or you can take a lot of losses very quickly as well. And there is execution challenges because of that. They change so fast, faster than you can put in an order often. And so there's definitely execution risks and challenges with zero DTE trading as well. So really, in short, they're fast, cheap, and often risky, which is a mix that appeals to some people, but not always suitable for everybody. You have to do it the right way. So time decay, how to manage this risk? Well, because there's no time left, the zero DTE options lose value extremely quickly. So unless the market moves the way you want it to, within a few minutes or so, you can often find yourself losing value on the options just from time decay. And sometimes this can shrink to zero if you're trading in the afternoon quicker than you'd like. So you've got to be very careful with time decay on these options. So the solution to this is having a fast strategy with a high win rate. Obviously, high win rate's nice, but if you can get the direction right within a few minutes or so, that really helps avoid this major problem of time decay. The worst thing that can happen is these options, the underlying just goes sideways for a significant period of time, and you just lose value from the theta decay. This plot just shows the example of theta decay. It's kind of the classic plot that everybody shows. For if you have options that are expiring 90 days out, you have a very flat curve on the left there. So time decay is not really an issue when you're talking about 90 days to expiration. But on the right there, you can see that as we approach zero DTE options, so 0 days to go, the curve actually steepens pretty significantly. So that's the origin of the time value decay for these shorter dated options. And you're all right if you go out to 30 days or 60 days, but the zero DTE, the slope really starts to go up exponentially. So gamma is the other factor. So you have theta and you have gamma. This leads to the extreme price movement that we see with zero DTE options. And so they do respond much more quickly to price changes of the underlying than longer dated ones do. And so you can see in this plot here, zero DTE is the green, 10 DTE is the blue, and then 20 days to expiration is the orange. So you can see that gamma is significantly higher for the zero DTE options for at the money strike prices. So you got to be very careful with that. This leads to a lot of emotional problems with zero DTE trading, and this is where I see a lot of people having difficulties. Basically, because everything's amplified, all the movements are amplified, both up and down. It really amplifies the emotional challenges that trading already presents. So you have this really fast-paced, high-pressure environment, and so the rapid expirations basically force fast, high-stakes decisions. And so it's easy to panic. The fear of loss comes into things. You're talking about potentially losing the entire position if you hold till expiration. So this can cause hesitation, early exits, all the usual things that come into trading, things like greed and overconfidence, where you might get lucky on a few early wins with zero DTE trading, and then you end up over risking, not realizing the risk that you're actually at. 50% or so of the value of your options can disappear in minutes with zero DTE trading. So it's really important to have a risk management plan and stick to it. You got to be careful with impulsive trading because of these emotional decisions can basically replace your plan, and you can just start running on hopium where you're thinking it's just going to come back up and sort you out. But it's very difficult for these contracts to regain value once time decay sets in and you're at a big loss. So here's an example of options cost. So we're talking about how they're much cheaper than the longer dated options. And so if you look at the Q's price here at 349.2, the zero DTE calls only cost $110. But if you go to 18 days to expiration, which isn't really that far out, you're starting to talk 7 times more, so $730 for a contract. And of course, it gets worse as you go out to 81 days. To expiration, you start to talk $1,600 for a contract. So you can see the appeal for people, especially with small accounts or people that want to really load up the contracts in order to be able to scale in and out. These zero DTE contracts really offer a really viable approach for that. Here's another example. Imagine you bought an ATM call option on the Qs. If the Qs are at 350 and they move up $1, then this is basically an example of how the percentage gains that you can get are much, much higher for zero DTE options. So if you look at that first column there with the zero, that's the zero DTE options column. Remember the price was $1.10 for a zero DTE option at the 350 strike. Well, if the Qs move by $1 up, then with a delta of 50, it would be a 50-cent change in the options contract. So that 110 goes to 160, which is a 45% increase in the zero DTE options contracts. And this really illustrates the gamma really nicely of these contracts, right? Because you start looking at the 18 days to expiration where you're paying $7.30 for them, you're only getting a 7% move for the same underlying $1 move in the Qs. So 45% or 7%. And of course, it gets a lot worse when you go further out in expiration to the 81-day to expiration contracts, where you're only getting a 3% move for that $1 move in the Qs. So this really shows why people love these. You can get a 45% move instead of a 7 or 3% move. I know which one I'd pick. So just to sum up very quickly, very quick potential returns, much lower cost contracts, higher sensitivity to price movements. That's a double-edged sword though, because of course you get execution risks because of the high sensitivity. It's very sensitive to time decay, so you've got to make sure you're in and out of these trades quickly. So the big question is, why would you want to trade SPY options in particular? Well, first of all, the high liquidity. It's the #1 traded ETF in the world, and so it's very heavily traded, and it really gets around this execution problem. So you don't have to worry about the bid-ask spread on these things, and you can use market orders to get in, so you can get in for pretty much what it shows at the time. So because the zero DTE contracts also have very high volume, this makes execution really, really easy. And the main advantage also is, like, a lot of tickers don't have zero DTE options every day. So if you're looking to trade every day, you really have to go with SPY, although that is changing, like I mentioned earlier. At the end of January, I think it was, there was a lot more tickers introduced. Some of the Magnificent Seven also got zero DTE options much more frequently. And so, like, basically the massive volume translates into high liquidity, and it makes that execution much easier. Of course, the zero DTE SPY options are also extremely cheap, so you can use a very small amount of capital. So it isn't popular just by accident. Liquidity really matters, and that deep volume makes SPY ideal for intraday options if you approach it correctly, and that's a big if. So I want to start talking a little bit about the SPY ATM strategy in particular, because it really gets around a lot of these problems. It's simple, it's fast, it's accurate, and the trades are executed very mechanically. And so a lot of the problems people have is trading too many individual tickers. So if you focus on SPY, you get around this problem where individual tickers might have earnings surprises, crazy halts that happen. It's a lot of work to try and scan and find what your setups and everything. So I've always found that just focusing on SPY just simplifies things really nicely and protects you from things like earnings surprises. Because SPY tracks over 503 companies, it really diversifies and keeps you safer. And so focusing solely on SPY with a very mechanical approach is the heart of the SPY ATM strategy. And so a lot of people do still fail with using zero DTE SPY options. Basically, it's usually, from what I've seen, a lack of a mechanical system. So like with any trading, you have to have that mechanical execution. And so they fail to put a defined take profit and stop loss, or often position size is just too aggressive for the zero DTE strategy. So we really want mechanical rules to simplify that decision making. It gets around a lot of these emotional aspects as well and removes overthinking. So you can really execute flawlessly if you have the right strategy without fear or second guessing. I want to talk a little bit about why timing matters. So we alert these SPY ATM trades at a particular time for a reason. That's because you can have two traders that have the same setup and they can execute, but they get very different results. It doesn't always equal the same results. So the entry timing, when you enter throughout the day with zero DTE, influences the type of trade very, very much. So the option pricing is also time sensitive, so you've got to be very careful with this. So like I said, two traders can be right on the direction of the market, but still have totally opposite outcomes because of things like time decay, volatility, and execution quality. And just to kind of illustrate that a little bit, here's kind of the market structure. So this is intraday. Often the market open is chaos. I found that when I was trading in Seattle with these penny stocks, very chaotic. Mid-morning is the best time that we found, which has the structure. So you get away from that morning volatility and you start to get structure in the market. Trends usually at least established if there's going to be a trending day. Midday you see compression, afternoon you see positioning. And really the point here is the market is a rhythm. And so understanding when to trade the zero DTE options is often more important than how you trade them. My biggest mistake was, like I said, trading the market open. The market open's kind of a trap, right? So you have high volatility, which a lot of people would be like, oh, it's great, I can take trades and basically I could capitalize on that volatility. But with zero DTE, you have these very high premiums due to the volatility. So more times than not, you buy an options contract in the market open, and as the market settles down, if it doesn't move in your direction straight away, you end up having premium decay just from the volatility decreasing, and that can immediately put you at a loss. There's also wide spreads, which is also like the market hasn't really settled yet, so you have these wide spreads. Often, and what used to get me all the time is false breakouts and breakdowns, where you just think you've got the direction right, and then bang, it reverses and goes against you. And there's a lot of retail emotion at market open, which causes a lot of these breakouts, these false breakouts and breakdowns. So the first 30 minutes might look exciting, but they're often a trap. And so liquidity hasn't fully settled yet. So one thing I did briefly touch on there was position sizing. So if there's one mistake that I've seen people do, it's oversizing, especially with zero DTE trading. I always tell people I never buy a zero DTE contract with anything with any size that I wouldn't be prepared to lose for a zero DTE trade. Not that I'm planning to lose it all because I have very mechanical rules in place, but that's kind of a guideline for getting the sizing right. What you're comfortable with losing completely. So you have to size very small compared to other styles of trading. And so the risk per trade matters. You want to have consistent small wins rather than going for really large 100%, 200% wins or anything like that. And you want to basically be sized based on your loss tolerance. So like I said, the most blow-ups I've seen is from people going into zero DTE trading with much too large positions, getting kind of greedy and hoping for doubling a large position is definitely a recipe for failure. So we've discussed why zero DTE is so popular, the risks about zero DTE trading, why most zero DTE strategies fail or are just too much work. We talked a little bit about market timing and why it's important, and position sizing and risk mitigation. So let's start talking a little bit more in detail about what Spy ATM actually is. So imagine if all you needed to do was place the trade. If you were just given the details of what to place and you could just do it in like 10 seconds on your brokerage, that would be ideal, right? And so Spy ATM Alert solves a lot of the zero DTE problems in the following ways. Basically, you have a very fast trade. The average is about 20 minutes, which minimizes theta decay. Trade is entered at the same time every morning. So when the market is stable, like we talked about a few slides ago. So the market's stable, it's about 10:30 a.m. Eastern time. Things have settled down a little bit, and we have that nice market stability. We execute the trades very mechanically with well-defined rules. The system has a win rate of almost 80% over 500 trades. So that was the 2 years that I showed you at the start of the presentation. And the trade direction is determined by predefined proprietary logic, which was developed and tested rigorously over years until it was absolutely optimized. And we do have that statistical profitability over a large sample size, like I said, years of trade data, and not just a few trades like a lot of people will show. Here's an example of the Spy ATM alert. So this is given out in Discord, and every morning at 10:30 you get the thing on the left here. In this case, it was a call alert. And so you can see it says call alert up the top. It gives you the SPY value at the time. It gives you the strike price of the option, so 693 call. It gives you an entry price and a take profit price with a stop loss as well. And we encourage everybody to put in an OCO order with these numbers in order to make sure it's mechanically executed. We also give some sizing guidelines if people want to follow those as well. So the system looks for alignment, not just prediction. Certain criteria have to be fulfilled and confirmed, and then we execute mechanically on these trades. So it's really nice. These get pushed to your phone as well, so you can trade on your phone. You get the alerts pushed to you. So what is Spy ATM alerts really for? Well, it's for people who maybe have tried zero DTE options before and had a really hard time trading these. And if you want a mechanical rule-based approach, these zero DTE SPY options with Spy ATM is the way to go. This is the best service I've ever seen, and I've reviewed a lot of these services over the last decade or so. So it's a real privilege to be involved with this one. And so if you have time around 10:30 a.m. Eastern time, obviously you need just that small window. So it's for people that have that small window to set aside for a particular trade. If you don't want to be glued to your screen all day, it's also a really fantastic way to trade. Basically, if you're a busy professional or you're just looking for that single in and out trade, not all day scalping, I'll call it crackhead day trading, where you're scalping in and out all day, and at the end of the day, you probably don't even have that much profit. So simple and easy is the name of the game here. So it's for people who want very well-defined risk, clear exits, and consistent base hits over and over again. So we have a lot of good testimonials. I thought I'd show a few here. Zig Price was a struggling trader with a small account, and you can see what he had to say about Spy ATM here. He said it was easy to grasp. You can tailor it to your own strategy, although I don't really advise that because it's been tested completely with the rule-based system that we have. He says if you want to set and forget alert every day at the same time with a high success rate, this will fill that easily. If you want something that you can develop a strategy around to adjust to your own risk level, make your own, this can also do that. It's scalable. He says it has 18 months of back-tested proof. It is a lot more than that, forward-tested as well. But he does say it just works, and it does, so that's good. I've tried a half dozen services over the past few years, and this is by far the most competitive and easy to implement and adjust to. So he was up 8.5% with an 80% win rate in his first 2 weeks of joining the service. So he was very happy with it, so that was good to see. Lance is a huge success story here. I wanted to show his amazing results. So he grew his small account 78% in 6 months trading just the Spy ATM service. He started with $10,000 in May, and he took out profits of $1,800 and then $3,000, and then he currently has a balance of that $12,950 as well. So it's a total profit of $7,778 on a $10,000 account in 6 months. And so he said he likes the ease of entering the alerts, having a set time when the alerts come in, and he highly recommends it for zero DTE trading. Here's actually his account growth. So he actually did a fantastic job last year, so 2025. He started in May. You can see along the x-axis there, you have the dates, and up to the y-axis, you have profits on his account. And you can see it was pretty linear. There was a bit of a drawdown in August. You can see that in dip. But overall, it was a fairly linear curve going up the right way in terms of profit. So that was his growth in 2025. So like I said, this is 20% in 20 minutes. It can actually be faster than that. It's often 5 minutes. So you don't have to hang around for 20 minutes all that often. It's usually a maximum of 20 minutes or so. It's a simple call or put, so there's no spreads involved, nothing fancy, just a simple call or simple put depending on the market direction. You get given the entry, the stop, and the target, and also some sizing guidance as well. So subscribers receive a clear rule-based trade setup, no guessing, no overtrading, which is one of the main reasons people kill their accounts trading zero DTE options. Just as an example here, these are the curves that I showed at the start of the presentation here. So imagine you're trading a $10,000 position. You have a large account, say you have a $200,000 account or something, you want to try this, and you're using $10,000 positions. That's $2,000 profit on the winning days every day that you have a winning day, which is 8 out of 10 days. And so if you started with $2,000 on a small account. If you don't have that huge account, you start with a small one. You could end with $4,000 in a year based on our results from the last couple of years. That's not promising anything going forward. Things can change, and we're actually developing a new system at the moment to complement this, to make sure we're adjusting for the market this year. So it's pretty interesting the way it's going. So this could easily sell for $5,000 or $3,000 or something like that. See a lot of people selling high ticket items. But we've actually made it pretty straightforward and easy for people. It's only $150 for a month, so you can try it for a month, or you can try it for a quarter. So you can basically do $300 for a quarter, or the best deal is on the annual here. So what you get for that is you get an active Discord community, you get a chat room, you get the alerts that come out every day. And if you want to scan the QR code, it will take you to the landing page of the Spy ATM alerts, and you can check it out from there. Additionally, I think Dave's probably going to share the link. If not, it's down the bottom there, stockalertsreview.com/Spy ATM. And I think that about does it. A little bit shorter presentation. Hopefully Dave appreciates that as it gets you back on time. And that's really all I've got to say. So I'm open for any questions.
Hey, if you got any questions, let us know here quickly here before we turn over to the next speaker here. I want to thank Russell for trying to get us back on schedule here a little bit. Looks like a couple questions coming in. I don't know if you answered these yet.
I can't actually see them. If you could read them out, that would be pretty helpful.
Sure. Someone's saying, well, let me just make sure it's a okay question here too. Okay, why? Someone's asking why the Spider and not the SPX?
SPX is much more expensive. If you've ever traded options on SPX, it's much more expensive. So we're trying to tailor this for people with small to medium accounts as well as people with larger accounts.
All right, and someone's asking, what's your minimum account size that you recommend?
A minimum of $2,000 or $3,000, just so that you can position with small enough positions. So if the contracts are $100 or $200 each, I talked about that quite a bit in terms of like, you don't want that to be a big chunk of your account. You want that to be a very nice small amount of your account. So something like $2,000 or $3,000 gives you a lot of leeway for taking on one or even two contracts with that. So that would be the minimum kind of recommended account size.
All right, looks like we're out of questions. I'm going to thank Russell for joining us today. Again, you can find him at TradeThirsty. The link to his offer is right there in the chat. Also be next to the recording when I post those recordings about 5 hours after we end today. So thank you, Russell.